Hey traders, welcome back to this week's weekly stock market review. We're going to be looking at the best stocks to buy now and also to sell now, kicking off with the global benchmark indices around the world before drilling down to the sector level in the US stock market. And then we're going to drill down at the end of the video even further, and we're going to look at some of the best individual stocks to the long side in some of the strongest sectors in the US. And then we're going to look at some of the best individual US stocks to the downside next week in some of those weaker sectors in the US stock market. Okay, so kicking off with the global indices, but the first thing we need to pay attention to is a news event next week. We have FOMC on Wednesday. It's going to be a big week next week, and the Federal Reserve are expected to cut 25 basis points. JP Morgan, Wells Fargo are still calling for a 50 basis point cut. So there is potential for a 50 basis point surprise on Wednesday next week. However, because of hotter inflation data this week, the consensus has turned to 25 basis points. Either way, the good thing about indices is we can trade them individually, which means we can look at stuff to the long side, we can look at stuff to the short side, and then we can reactively trade the opportunities that set up, whether the overall market conditions go up or down. So coming into this week, the first thing I want to do here very quickly is just click the in play button in the hedge dash system. And when I do that, you can see this separates out the markets which are above 50% and getting stronger, the markets which are below 50% and getting weaker. It highlights the best markets. So going into next week, we're going to be looking at the Nifty to the upside, TSX to the upside, actually two we looked at in last week's video to the upside, and to the downside, the Nikkei, the Kospi, and we'll also look at the Stoxx 50 in today's video. Now, the one thing you may have noticed is the VIX is sitting right at the top of the performance metrics. This is indicative of heightened levels of volatility consistent with further downside in stocks. However, because we have FOMC a catalyst, that can change things. So depending on what happens on Wednesday, we could very easily see volatility cratering, and this can change up the signals in the hedge dash quantitative analytics platform next week. So it does look like we still have risk off overall in markets despite the push higher last week. And if the Fed are going to cut on Wednesday, this should, historically speaking, be bullish for about 3 to 4 weeks. Now, there is one caveat here. If the Fed go 50 basis points, it may actually do the opposite. The market might actually be scared by the fact that the Fed have felt the need to go 50 basis points, especially after hotter month-on-month inflation. And they might be looking at that and saying, well, hang on a minute, if the Fed are going to be forced to go 50 basis points here and they've pulled the trigger on this, this must mean things are a lot worse than people realize, and therefore this could actually counterintuitively see stocks selling off. So really next week is going to be a big event, and we're going to be able to play stocks to the upside or the downside after this event comes out both ways. So if I unclick the in play button, you can see there's a couple of other markets we can look at here. To the upside, we'll look at the S&P 500. I think it's probably a good idea. We'll look at the S&P 500 every week, but also the Dow Jones. The Dow Jones, out of the two US indices, are the two that are setting up the best to the long side next week. However, we'll look at one more. We'll look at the Russell this week as well to the upside. Why? Because if we get that rate cut, the Russell small caps are the most sensitive out of all the benchmarks to interest rates. So we should theoretically see an outperformance in the Russell should we get 25 basis point cut on Wednesday. So again, on balance, even though the VIX is telling us we should be focused on risk off, the FOMC rate cuts coming up on Wednesday in all likelihood are probably at the margin going to be bullish for stocks, and therefore we're looking ahead to that catalyst for a on balance bullish bias in the indices going into next week. Kicking off then with the Nifty. Now the Nifty was the top long in last week's video, and we did rally up, taking out the highs last week in the Nifty, and I'm still looking to the upside in the Nifty. Any pullback in this market, what I want to see is this. I want to ideally see it come down, take out the 24970. This is going to put this market oversold intra-week, a market that I want to be long. And this is going to be a great place to look for a 1 or 2 day reversal, just as we do in the weekly Forex forecast videos, looking for a 1-2 day reversal to the upside. And again, I'm usually trying to capture 1 to 2 days worth of volatility out of 5 days. The second thing then in the Nifty is if for whatever reason, although this is unexpected, if we breach the 24970.76 and come all the way down to the 24585, it's the second place I'd be looking for a potential buying opportunity in the Nifty, for a 1 or 2 day reversal to the upside. Why? Because here we become extremely oversold intra-week. Now, the other thing you can look for, of course, is that intra-week breakout. So if we start to pull back and we settle into the 30-period moving average here, especially with this market, because we've got this very, very strong move up, you can see you get momentum, kind of consolidates into the moving average, and you can get the next leg up. So any kind of pullback, if it consolidates, you can look for that rally into the upper bound at 2574223. And this is a great profit taking target for any intra-week longs in the Nifty, because above this, you have roughly only a 30% chance of continuing to the upside in any significant way next week. Next is the TSX 60. This is the Canadian benchmark. I can either be a buyer or do nothing. Selling this is not an option for me next week. And this was a market alongside the Nifty highlighted to the upside in last week's video, and we actually broke out. We broke out of here in a third wave. You can see this kind of second wave we broke out. We're in a third wave. So what I'd like to see is I'd like to see this market pull back, breach the 23237.88. We become oversold intra-week. This is going to be a great place to look for a 1 or 2 day reversal to the upside. These are the exact setups I look for and trade and post in real time to GMT members throughout the week. And if we breach this and we come all the way down to the 2290712, even if I'm already involved, and often I am if they come down to these levels, this would be the second place I'd be looking for a 1 or 2 day reversal, either, for an initial position, or if I'm already involved, to risk manage that first losing trade, and I can get out most of the time for break even once I implement this kind of technique. And the third thing you can look for is if this just consolidates, that kind of intra-week breakout and consolidation, you start to see it just consolidating and the moving average catches up with it right in this area, you can look for that bull flag setup into the 23899.41 as a good profit target to the upside next week in TSX. Next market we're going to look at to the upside is the S&P 500. Now, I did actually short the S&P. This was a market highlight in last week's video. Traded into its upper bound. I shorted this and it didn't really work. It started to move against me. And this is that anticipation of the rate cuts coming in. I wanted to see it kind of correct and chop around after trading into its upper bound, ahead of FOMC next week. So coming into this week, I do favor setups to the long side now in the S&P 500. What I would like to see is this. Any kind of pullback, and very much like in yesterday's weekly Forex forecast video, if we get a kind of neutral reaction from the FOMC on Wednesday, so that would be maybe they cut 25 basis points and not too much happens, I would be looking for this to pull back, breach the 5523.42, and this would be the opportunity I'd be looking for a 1 or 2 day reversal to the upside in the S&P 500 next week. If for whatever reason we start to see it breaking through this, maybe we get, an unexpected kind of bearish catalyst for stocks from FOMC. For whatever reason, not expected, but let's say it blasts through there and we take out the 5420.83. This would be the second place next week, especially if I'm already long and the trade hasn't worked. This would be the second place next week, and most of the time it doesn't test these gold levels, although when you have a catalyst it can. But this would be where I'd be looking for a 1 or 2 day reversal to the upside, whether I'm long and risk managing it or an initial position. And the final thing you can look for is that kind of consolidation into the 30-period moving average, and then you get the cut on FOMC on Wednesday, and you see that rally intra-week. You get the rally from the cut, then it pulls back, and you get that bull flag follow through into the upper bound at the 5728.61. That is the profit target to the upside in the S&P 500 next week. Next is the Dow Jones. Same thing with the S&P. You can see we've already broken out, and instead of selling off last week, we continued actually to push higher and reverse, especially kind of intra-week. So any kind of pullback in this market, what I'd like to see is if nothing really comes of FOMC and we get a 25 basis point cut, it's expected, no one's really surprised, there's no real major volatility in the markets, and we start to see the Dow Jones drifting below the 40684.28, this is where I'd be stepping in looking for a 1 or 2 day reversal to the upside in the Dow Jones. If for whatever reason, as unexpected as it is, we breach this and come all the way down to the 39974.78, this is the second place next week. I'd be looking for a potential long opportunity in the Dow Jones, whether to cost average this or for an initial position. And of course, if we just consolidate into FOMC, which happens very often, you just consolidate into it, and then you get the breakout on FOMC with the rate cut, it tends to pull back. You usually get one chance to follow through into the upper bound, in this case at the 42103.27. And the final indice to the upside we're going to look at is the Russell. Now, the Russell isn't as good a long opportunity as the S&P 500 or the Dow Jones, but with a rate cut next week, we could actually see it start outperforming because of this. So any pullback in this asset, I'm going to be treating it exactly the same as the others. I'd like to see this come down. We get a 25 basis point cut. Nothing really happens. We breach the 2102.40. I'm going to be looking for a 1 or 2 day reversal to the upside as this asset becomes oversold intra-week. If for whatever reason, as a plan B, as a backup, if we come all the way down to the 2024.70, whether I'm long from here or not, this would be the second place. I'd be looking for a 1 or 2 day reversal to the upside in the Russell. And of course, you may well just see that kind of FOMC bull flag setup. So I can only buy this. I cannot sell this asset next week. And if we correct into FOMC and then you get that rally on FOMC, it pulls back and you get the follow through. In this case, the profit target to the upside is the 2257.79. Okay, so to the short side, the first market we're going to look at is the Nikkei. Now, it may be the case that if we get those rate cuts and you start to see stocks breaking higher, the global indices breaking higher, it may be a little risky to come in and short these from the upper bounds. However, especially the first one, very often they can push through here into the second one. If it's a very big interest rate decision, you know, say it's 50 basis points surprise cut and you see stocks really rallying. However, you can use these as very good plan Bs, because if we come into FOMC, what you can look for is if nothing really happens on FOMC, then of course you can look for that 1 or 2 day reversal from the 37923.49. And I would again be looking for 1 or 2 days down. Now remember, if we get a weaker dollar from FOMC, what's the currency, as we talked about in yesterday's weekly Forex forecast video, that's going to benefit the most? It's going to be the yen. And if the yen goes higher, this is deflationary. This should put downwards pressure on the Nikkei. So I would be looking for potential 1 or 2 day reversal from the upper bound. If we breach this and we test the 39278, it's the second place. Whether I'm short or not, I'd be looking for a potential short opportunity in the Nikkei. And the final thing you can look for is if for whatever reason you see this market pulling back, and what happens is something comes out on FOMC, which is a surprise, who knows what it could be, but you start to see stocks selling off from FOMC. Well, instead of going in and shorting some of the stronger benchmarks, you can look for that reversal to the downside in the Nikkei, and then when you pull back, you can look for that bear flag setup into the prior low and into the 35212.50. Next is the Kospi, and the same rules apply here really as they do for the Nikkei that we just looked at. So any kind of pullback, I would be interested in looking for a breach of the 2652.99, possibly a gap close, and this would be an opportunity to look for a 1 or 2 day reversal to the downside. And you could very easily get that, you know, if you get global indices moving higher on a Fed cut and the US benchmarks rally, you know, this will also push up, and that would be the opportunity to fade that maybe later on in the week for 1 or 2 days down. Again, if you get a very negative dollar reaction from FOMC and everything starts to rally hard, you might want to avoid stepping in and shorting some of these. Instead, go to those intra-week breakouts we looked at in some of the stronger benchmarks. The second thing is, if we breach this and we take out 2730.60 in the Kospi, this is the second place. I'll be looking for a 1 or 2 day reversal next week, whether I'm short with one position and just risk managing it, or this is a brand new initial position on its own. And the third thing you can look for, again, if we start to consolidate into FOMC and then you see all the indices selling off, instead of going and shorting some of the stronger ones, you can step in and you can short the Kospi down to the lower bound into the prior lows here at 2497.78. And the final global indice to the short side we're going to look at is the Euro Stoxx 50. Again, think about this. If we get that 25 basis point cut or we get weakness in the dollar, what's the currency that's going to most benefit? Well, the Japanese yen, because of that repatriation that we've been seeing from the yen carry trade, but also the euro. The euro should benefit to the upside on dollar weakness. And if the euro pushes higher, this is going to be deflationary and it's going to be suppressive for the European indices. Now, it doesn't mean they can't go up. It doesn't mean that they can't go up at the same time as the US indices go up, but they should go up at a slower rate because the US benchmarks will have the wind of a weaker dollar in their sails, whereas the European benchmarks will have a headwind with a stronger euro. And actually, if you put that spread trade on, you know, you should make money on the spread. If you get a weaker dollar, you know, the US indices should outperform the European ones. So with that said, if we pull back, if we do get some strength in the indices, One of the ones I would be looking at potentially shorting would be the Euro Stoxx 50. I'd rather short this than some of those US benchmarks we looked at. You can see we do actually have a double top technical pattern over here, reversal. And so any pullback to here would be a retest of this double top pattern. We break the 4932.54. You can look for those reversal patterns on lower time frames for a 1 or 2 day reversal. If we blast through here, say we get a very, very weak dollar and all the indices rally strongly together, then the second place I'd be looking for a potential short would be the 5021.74. And, you know, if I'm already short, this would be a cost average. However, the third thing you can look for is if all the indices start to break down intra-week, because after FOMC, for whatever reason, we get a sell-off in stocks, we should see them all go down together, and you can step in and you can look for that bear flag setup in the Euro Stoxx 50 down to the 4754.15 and into the prior lows over here as well. Drilling down to the US sectors quickly, and again, I'm just going to click the in play button. And what this has done is just separated, again, those above 50 and getting stronger, those below 50 and getting weaker. And we can see two clear standouts to the upside. XLRE, XLU. XLU is the most risk-off sector, so we're looking at the internals of the stock market here. And actually, the internals are pretty poor. You know, XLU being number 2, very often precedes corrections and reversals in the US stock market itself. However, if we get the Fed cutting, you can see all of this change. This is why the event next week is so important. So we are going to be looking at a couple of XLRE stocks to the upside. We're going to look at XLU stocks to the upside. We're also, to the short side, going to be looking at a couple of XLB stocks and also some XLE stocks. And if I remove the in-play button, you can see we do have also to the upside XLY. So I'm going to show you one of the better XLY stocks heading into next week that we can look at. And to the downside, we can also look at an XLC stock, which I think has more downside over the next few weeks. Okay, so kicking off the individual stocks with VTR. This was a market highlight in last week's video, and we were right here. And you can see I highlighted this as a good stock to the upside. Last week, we tested the 30-period moving average, and we rallied. Look at this rally last week. This was the number 1 stock in last week's video to the upside. I am, once again, looking for long opportunities only. So coming into this week, I'm going to be looking for a couple of things. I would like to see it breach this, come back, stair-step the prior high, and turn oversold intra-week at the 63.35. If it does that, I would be looking for a 1 or 2 day reversal to the upside. If we break through there for whatever reason, as unexpected as it is, and we take out the 61.64, we become extremely overbought intra-week. This is the second place I'd look for a 1 or 2 day reversal, probably cost averaging an initial losing position here. However, this is not likely to happen. We also have this opportunity intra-week very often because we've already pulled back and we're consolidating by the 30-period moving average here. So you can also look for that bull flag breakout intra-week, and you can look for that setup into the upper bound and the profit target here at the 66.76 for any intra-week opportunities in VTR. The second XLRE stock we're going to look at is AMT, and this is a stock that is already trading below its moving average. So we could very easily see this one, unlike VTR, which consolidating into it, you can get that intra-week breakout. This is already trading below it, so I would not be surprised to see this pull back, breach the 23153. If it does that, I'm going to be looking on lower time frames for reversal patterns for a 1 or 2 day reversal back inside this range. If for whatever reason, whether I'm long or not, we come all the way down to the 224.56, we would then turn extremely oversold intra-week on a stock that I'm only looking to buy or do nothing. So this is the second place I'd be looking for a 1 or 2 day reversal to the upside. And the third and final thing you can look for is that intra-week breakout. Look for it to cross back over its moving average, settle into it as the moving average turns up, and then you get that bull flag into the 245.46. Okay, so moving on to some of the best utility stocks in the utility sector, starting with AEP. This is a market already started consolidating around its moving average. So what I'd like to see ideally is for this to turn oversold intra-week, take out the prior low. This would be an area I would look for a 1 or 2 day reversal to the upside in this stock next week. If we break through here, for whatever reason, whether I'm long already at the first lower bound or not, and we breach the 99.07, this becomes extremely oversold intra-week and has roughly a 95% chance of actually reverting back inside this range. That's what the forward-looking market probability suggests. So if we trade into this, this would be the second place. I'd be looking for a 1 or 2 day reversal next week. And the third thing you can look for, if it pulls back, consolidates around its moving average, because we've already crossed it, look for it to settle into its moving average, and you could even get that bull flag straight out of the gate Monday, Tuesday, into the upper bound at the 106.71. That would be the profit taking target for the week. The second utility stock we're going to look at is NEE. Now we're trending to the upside. We're above the moving average. So you can look for this to correct into the moving average and start to consolidate into it. And that would be your intra-week breakout. So you're looking for that bull flag setup into the upper bound at the 87.61. If instead of consolidating into the moving average, it breaks below it and very often pulls back and then sells off into the 81.68, this would be where I'd be looking to buy this market for a 1 or 2 day reversal to the upside. And if we break all the way through here, whether I'm long or not, the second place I'd be looking for a potential long opportunity to the upside is below the 78.71, where we become extremely oversold intra-week. That's where I'd be looking for a 1 or 2 day reversal from those extreme oversold levels next week. And the final stock to the upside is eBay. This sits in XLY, consumer discretionary. And if we get rate cuts, don't be surprised to see eBay really benefiting from this to the upside. We're already trending to the upside. So again, you can look for that pullback, consolidation into the moving average. And that is what gives you that opportunity to start to look for a bull flag setup into the 65.50. If, very similar to this, you come down, you break below it, and in this case, maybe trade into the lower bound here at the 61.37, that would be where I would reactively be looking for a 1 or 2 day reversal to the upside in eBay. And if we break all the way through this, and whether I'm long here or not, the second place I'd be looking for a 1 or 2 day reversal would be below the 59.31. That's where we become extremely oversold intra-week in eBay. Wrapping up the video then with 5 of the best stocks to the downside, and it's in XLE. We're starting with the XLE sector. XLE really underperformed last week. It was the top short sector for last week, and the sectors worked really nicely. Although the short in the NASDAQ and the S&P didn't quite work out last week, the individual stocks and the sectors really performed exactly as we were looking at in last week's video. So any pullback this week, what I'd like to see is, I'd like to see this really, it's quite a big sell-off. So I'd like to see this pullback breach the 29.08. As soon as we take this level out, anywhere above here, we are overbought intra-week. Say we come up and we test a resistance. And I like to put those together. We become overbought, where's the nearest resistance? We become oversold, where's the nearest support? Put those two things together. This is going to be an opportunity to look for a 1 or 2 day reversal to the downside. If for whatever reason we get a big snapback and we come and stair step this massive low down here, then the second place I'd be looking for a short, whether I'm short or not, would be from the 30.29 for a 1 or 2 day reversal. And finally, if we start to pull back and we cross back below the moving average like this, you can look for it to settle into the moving average once again, and that's your opportunity for that bear flag into the lower bound next week, and the profit target to the downside at the 26.65 in HAL. Just a quick note, should be obvious, but we've got the tickers in the top left hand corner when we're going through these charts. Next is Oxy, another oil stock, sits in XLE, and we're sitting right at the moving average. So what I'd like to see is, I'd like to see this pullback breach this high over here and take out the upper bound. Now we're overbought intra-week. I'm going to be looking for momentum to slow, reversal patterns on lower time frames for a 1 or 2 day reversal to the downside. If we blast through here for whatever reason, unexpected as it is, whether I'm short already and looking for a second position or just an initial position, if we blast through here and preferably take out this low, as we trade into this nice Kia broken support turns resistance, this would be a great place. Once we go extremely overbought intra-week, this would be a great place to look for a 1 or 2 day reversal as well. And the third thing you can look for is, if we start to pull back and then we just trade back down below the moving average, it follows it down and you get that kind of bear flag into it, and then a sell off into the lower bound at the 49.27. Very good example here. Sells off, pulls into it, sells off. Sells off, pulls into it, kind of hugs it a little bit, and then sells off. Okay, so moving on to the second weakest sector, XLB after XLE, the materials sector. Started with the Mosaic Company, ticker MOS. We've already started to cross back above the 30-period moving average. What this means is we're in a deeper correction already. So what I'd like to see, this continue high next week, take out 27.67. And this will be an area I'll start to look for potential 1 or 2 day reversal back inside the range. The second thing I'm going to look for is if we blast through here and we take out the 28.95, we become extremely overbought intra-week. We'll start to look for momentum to fail. Also, if we take out these highs, that would be great. And I would be looking for a 1 or 2 day reversal to the downside. And finally, just like over here, we trade into it, we break below it, we pull back, we kind of tuck into it, and that kickstarts the next leg down. You can look for the same thing as well. If we do not come back and take out the upper bound, you can look for that sell-off. Moving average turns like this, it kind of tucks into it, and then you get that bear flag in this case into the 25.10. The second XLB stock we're going to look at is FCX. This is very, very weak in the hedge dash algorithms, and I am looking further downside. What I'd like to see is, I'd like to see this continue higher because again, just like Mosaic Company, we've already traded above the moving average, so we're already correcting. We breach the 44.80. I wouldn't be surprised to see this breach this, become overbought intra-week, and then close this gap over here. This would be an opportunity to look for 1 or 2 day reversal back inside the range in FCX. If we blast through here for whatever reason, and we take out the 46.94, it's the second place. I'd look for a 1 or 2 day reversal, whether I'm short or not, if this is just an initial position. And of course, you can look for that pullback below the moving average and look for it to tuck into the moving average and then sell off. That's the kind of bear flag setup you can look for intra-week down to the 40.51, which is the profit target to the downside intra-week in this stock. And the final stock we're going to look at is Google. Sits in XLC communications sector. Not as weak as XLE, not as weak as XLB, but it is the third one from the bottom. We've already started to cross over just like the prior two stocks. So what I'm going to be looking for is I'm going to be looking for this to continue. Breach the 162.91. This is where you can look for a 1 or 2 day reversal back inside this range. If we blast through here, take out the 16836, we become extremely overbought intra-week and we trade into a prior significant high. This would be a great place to look for a 1 or 2 day reversal as well. And also, if we start to trade up, you can look for that break below the moving average in this case. Moving average turns, and again, very much like this, pulls into it, pulls into it, pulls into it. You can look for that bear flag into the 30-period moving average for a short down to the 15200, and there's a gap close down here as well, which I wouldn't be surprised if it took that out. So those are the 3 setups I'll be looking at to the downside in Google next week. I cannot buy this stock, I can only short it. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge Hedge Dash trading app used in today's video by heading over to www.hedgedash.com. Access to the cutting-edge Hedge Dash platform is included with every GMT membership.